Thanks for joining us again on the Exploring Mining podcast. Today I have two fantastic guests, Jeff Clark and Peter Krauth. Both now can be found under thegoldadvisor.com for both their newsletters. Today we're going to discuss everything gold and silver, from China reserves to the US, Gen Z investing into gold like never before, and two juniors definitely worth paying attention to. So stay tuned all the way to the end to hear about that. For investors, we remind you that all investment includes risk and loss. Please read all disclosures and disclaimers on this podcast and at the end of the show and on Investor Ideas website. I hope you all enjoy the show. Jeff and Peter, it's so great to have you both on the show. Peter, obviously, this is, I think, your fourth time here. And Jeff, it's great to have you as well. So I wanted to just get right into it. Peter, maybe we'll start with you. We're seeing silver at the lowest price since I think about May 9th. Do you want to talk about what you're seeing out there in the market?
Absolutely. So, in fact, interestingly enough, I'd been telling subscribers since around early to mid-June that I thought that, it was getting a little rich around the levels we reached in May of $32. And I thought that it was a quick run from about 22 to 32. That's a 45% gain that started around sort of late February or so. And that they should expect some kind of, at least a consolidation, if not a pullback. That sentiment had probably gotten a little, overbought, and that we would likely see 28. And I thought, on the downside, if we got a real sort of washout in sentiment, that we could maybe even see as low as 26. So we're below 28. We've reached that first target. I honestly think that the dollar could run a little bit more from now. It's corrected, but we've seen the dollar index start to move up. And if you look kind of like on a technical basis, the momentum indicators are suggesting that it could run a little bit higher, and I think that will create headwinds for the next few weeks. It's not this is not an ongoing thing, but as we work our way through the summer and there are the summer doldrums and there's a bit of apathy for the sector, I think that you can see the dollar run up, create a bit of headwind for precious metals, and maybe see a bit more pressure. But that for me means opportunity, buying opportunity. That would be a great time for people to add or to start allocating to the sector.
Jeff, I want to bring you on as the gold expert here. What do you think that we're seeing in the last week? I mean, we saw highs and now we're seeing, do you think it's profit taking or a correction in the market, or what are you thinking out there right now?
Callie, thanks for having me on. It's great to talk to you. I haven't been on your show before, so I really like it. So thanks for having me. Gold, like silver, has surges and corrections, surges and corrections. We had a surge, now we have a correction. It's seeming to stabilize a little today, but I went back and documented all the corrections in the gold price in the last bull market from 2001 to 2011. So that decade, there were 20 corrections, believe it or not, in that 10-year period. And the average of all those corrections was 12%. 12% correction in the middle of a bull market. If you take out 2008, the crash in 2008, it's still 10%. So 10% from 2,400 would put us down around, 2,150 or something like that. So we have not corrected 10%, what would be the average correction in a bull market, at least the last time. Even in the mania in 1979, that very short period, about 13 months, 12 months, the gold price went parabolic. And there were still 6 corrections then in that short period of time. The average then was 10.7% in the middle of a mania. So this is all to say that we should expect corrections, A, and B, that what's happening right now is normal historically, and C, like Peter said, use it as an opportunity to buy things that you think may have gotten away from you, that got a little too rich, stocks that you wanted that are now pulling back. And of course, gold. If you don't own a material amount of gold, this is an opportunity for you.
I feel like the world is a little bit chaotic, obviously, at this moment. And it looks like, only probably the Dutch have their head on their shoulders right now, that they're calling it a reevaluation of gold. I'd love to hear both of your answers on that. Do you think that we're kind of heading towards that as we watch geopolitical tensions pretty much everywhere at this point?
You can see, looking at gold price behavior, that it does spike or jump on any geopolitical issue. And that's what we could easily have this fall, right? Who knows what's going to happen? Personally, this is something you may not hear from a lot of people, but I don't like it, because what tends to happen is gold gives back 99 times out of 100. It gives back that jump. It falls back down to where it was once the geopolitical concern stabilizes. So I don't particularly like that. Now, of course, there are many reasons why gold will rise, not just due to geopolitics. It's doubled since 2019. Not a lot of people are aware of that. And that obviously is not all due to just geopolitics. So, the gold bull market is alive and well. And, we're headed to 2,500. That's going to be the next surge that takes us there, maybe higher, who knows. Silver's going to go back to the 32 and then on its way to 35. I think it's probably headed back to 50 at some point. So, geopolitics and all that could help that.
I would add is that, I think that you talked about revaluation, and I think that it's happening, and it's happening even, without some kind of a black swan or a crisis. And, we've seen, I believe that we're in a true secular bull, like a multi-decade secular bull, which probably started in 2000, 2001, when gold bottomed at $250. I mean, a lot of people don't realize that we're at almost a 10x since then. And I think what we lived from about 2012, 2013 till maybe 2015, 2016, that correction, you could actually stretch that probably a year or two either side of that. But that was what a guy like Jim Rogers calls, your mid secular bull correction, and you usually get a 50% discount in that time. And gold reached, if I remember right, $1,900 in September or so of 2011. And then we went to 1050 in December of 2015. So we're looking pretty good right now from those levels. And, I think that the central banks are doing the work for us. The last couple of years, they've been huge buyers. And I believe it's totally a case of do as they do, not as they say.
Yeah.
So
Yeah.
just watch what they're doing. They have obviously great information, and everything I'm reading points to very, very solid reasons that they have underlying reasons for doing what they're doing. So it's central banks, it's sovereign wealth funds, it's highly informed, high net worth individuals who are loading up on gold. And people just need to be aware of who's doing it and why they're doing it. And then they'll realize that they need to be part of that.
Callie, I was going to jump in there. It's not just central banks, it's other, entities like Peter's saying. JP Morgan just had a note 2 days ago, sell stocks and buy gold. That was their concluding, remark. That's really something for JP Morgan to say that. And then this commodity intelligence fund said, this is the pullback so many traders who missed out on the first leg of the current super cycle in gold have been waiting for. And they just said that 2 days ago. So, I think we have a lot of support from a lot of entities, and that's going to make demand higher. And once another crisis hits, which is inevitable, given our financial system and everything, gold's going to surge again.
Wanted to ask my one tinfoil hat question of the day, as we have to, talking about gold and silver. there's been so much conversations lately about what reserves are where with China, with the US, with everything. Like I said, I don't want to go too far into it, but what are you guys thinking we're going to see like after this election and how we're going to see the next maybe 9 months play out with some of these reserves? I feel like with this bottom again, it was an opportunity for people, like you said, to buy, and I feel like it's going to be interesting anyways.
For all we know, the Chinese are buying right now. They don't have to reveal their they don't have to disclose, when they buy. They always report later, and for all we know, they could be buying now in this pullback. So I think it's pretty clear that the Chinese want more gold, the Chinese government, as well as the citizens, but the Chinese government wants to load up on more gold. And it's, maybe a percentage of their GDP that they may be looking to get toward, get back to that or get to a 2% of their GDP. That would require them to own more gold. So, that's just one example of how they may measure how much they want. But I think it's pretty clear they want more and they're going to buy more. And there are different ramifications depending on who wins the US election. But, for me, I'm just glad I own it because there's going to be more turmoil ahead. There's going to be more crises. And, I'm just glad I own gold. So I feel like I'm prepared for that if some of these worst case scenarios play out.
Wanted to add a little bit to what Jeff was saying about Chinese buying. And, my understanding is that they actually use more than one entity to do their buying, and that some of these entities don't report. And so if it were you, what would you do? Would you say you're buying, or would you buy and then say you bought? Right?
Yeah,
So
exactly.
So I believe, like Jeff, the buying's ongoing now. They're very likely buying, and even if it's, let's say, the central bank that is usually the one that reports, and likely, in my view, other entities are buying, have yet to ever report so far. And maybe that will happen in a few years, right? And then we'll jump from, I don't know, 2,000 tons to 5 or 10,000 tons. Who's to say? It would not surprise me once they feel like they've got enough of what they want in terms of gold holdings. So I believe it is ongoing. And the other thing is, what I was talking about earlier about how, the central bank buying has really ramped up in the last couple of years. And my view, I think others share my view, but that what triggered that in a really big way was the freezing of Russian assets. And you had so many other governments and entities and just sort of, individuals and investors who were dialed in, who saw what was happening, realized the dramatic implications of that, and said, wow, I don't want to be caught off guard like that. I don't, I want to hedge myself. I want this, this liquid asset that has been, tested through millennia, and that pretty much anyone will take from me if I want to, provide it in exchange for something else, and that will, the transacting of which will not be restricted. So I think that's really has driven a lot of this buying in the last couple of years. So I don't think that's going away. And I think if anything, whoever wins the US election in the fall, I would not be surprised to see the rhetoric, dial up against the East, so to speak. And that would just be more positive for precious metals and probably even commodities as a whole.
I want to jump into, I was reading this week about some studies that came out by State Street, and I think it was Bank of America as well, that millennials and Gen Z are really driving a lot of this demand for gold right now. I think they said it's about 17% of their portfolio is allocated to gold, which is higher than actually, all of us that have probably been talking about it for a long time. And I think 45% of Gen Z are invested in gold or interested in investing in gold. What are both of your thoughts on that? How that's going to change the dynamics of this market?
That's great to hear. I wasn't aware of that study, Callie. So that's great to hear that age group is doing that. And it just shows you the timeless value of gold. The price is being, pushed around and pushed down by traders, but gold's value just simply doesn't change. And when you have major entities like JP Morgan and central banks and et cetera, announcing publicly that they're buying gold or recommend buying gold, it's not too hard to understand why they may be doing that, especially when real estate is elevated and starting to pull back now. Tech stocks are starting to pull back now. So, the only thing out there really is maybe Bitcoin, and AI has gotten just, too frothy for my taste. But I think when you add all that up, it's actually not too surprising to hear that. So it's great to hear, and that's just going to add to more demand.
To kind of just add two little ideas to that. One is that the same or similar note to what you said, Callie, I have read that over the last probably several months, at least, that in China, young investors are buying something that they call gold beans. They look like coffee beans, but they're actually made of pure gold, and they're probably relatively inexpensive because the quantity is quite small. I don't know the exact size and weight of these things, but they're accessible to them because the amounts are small, so they're affordable, so to speak. And so they're buying these things. It's an in thing to do, and they're accumulating them. So it's really smart in a way. It's sort of like a bit of dollar cost averaging. They're adding to their little hoard of these gold beans. And so that's just sort of one little anecdote I wanted to point out. But if you think about what you said about how, this younger group of the population is more exposed to gold than anybody else. If we think just over the next few years, the implication of the boomers, who are probably their parents, as they start to pass on and these younger generations inherit from them, if they're already bullish on the precious metals, and then they start to have this access to probably larger amounts of wealth that they could turn around and have to start reallocating, they're already favorable towards precious metals. So that could just help push things even higher. So that's just, a thought that came to mind that I kind of wanted to point out.
No, I love that. Hey, that's actually positive for the future. So I'll take it.
Right.
I wanted to just get a little bit of your commentary from both of you on the supply demand side, as we've just talked about so many reasons why that's going to change. Peter, do you have any updates on like the solar industry and where we're at on the supply demand for silver? And then Jeff, if you want to jump in after.
Silver's been a very tight market for the last 4 years. We're in what we call a structural supply, a structural deficit scenario. And if we go by the Silver Institute's World Silver Survey, the most recent one being from April for 2024. So just to give your viewers a quick overview and perspective, the silver market is about 1 billion ounces of supply every year, and about 85% of that comes from mining, and about 15% comes from recycling. However, so that's supply, overall supply, 1 billion ounces. Demand has been over 1.2 billion ounces. So we're talking about a 20% deficit in a 1 billion ounce market. That's huge. I think, if you look at the numbers, they're really quite revealing. A lot of that is led by the demand and growth from the solar industry. Right now, solar alone accounts for about 20% of the entire silver demand market, and that's been growing. Last year, it grew at an incredible 64% from 2022 to 2023. The Silver Survey forecasts that it's going to grow another 20% this year. So it's just really been on fire. It's the sort of undeniable industrial driver of demand in the silver market. investment is also very important. It is more volatile, I guess, is what I would say. And so I kind of like to summarize it for investors, and in the sense that I say that industrial demand kind of provides a rising floor under the silver price, and then you have this wild card which is investment that kind of comes in ebbs and flows, and depending on all sorts of things. It could be geopolitical, other crises. It could be, we've seen it in the last few years. We saw it with COVID. Demand exploded. We saw it a year later in early 2021 when we had the silver squeeze. I would not be surprised to see another silver squeeze on the horizon. But you get these huge flows of demand into silver. And the fact that industrial demand has grown, it's actually taken a larger part of the silver pie. It was the case that about maybe 3-4 years ago, you had an even split between demand from industry, about 50%. And if you include physical investment, silverware and jewelry as one category of all as investment for silver, that represented also about 50%. But now we've seen an industry or industrial demand move closer to about 60%. So that leaves only 40% going to these other three categories that I consider a form of investment. So I ask, what happens when you get this surge of demand from the investment side? More will have been taken up by industry. There will be less available than previously, than just a few years ago, for to satisfy investment demand. So they'll likely bid silver up even more and even faster. So certainly that adds to its volatility. But if you're positioned and you make it work in your favor, then it's an opportunity.
Callie, if you were to add up the deficit in silver over the past 4 years, 2021 through this year, what's projected to be this year, it totals 2/3 of a billion ounces in just 4 years. That, like Peter pointed out, you have demand rising faster than supply is coming online. So you have a perfect storm that's forming. So, why isn't silver triple digits because of this? Well, there's still a lot of above ground ounces, but that's getting depleted. If you looked at all sources of above ground ounces, the Silver Institute reports it was about 1.6 billion ounces. It's down to 1.2 billion. So it's falling dramatically. It's getting used up because of mostly industrial demand, like Peter's pointing out. So if that trend continues, that headline there, silver supply getting too small or whatever, that could really ignite the price and bring in a lot of new investors from Wall Street, Main Street, whatever. So, but silver's, bottom line, silver's going to have another spike. It's had many spikes in the past. It'll have another one. It'll probably be related to why gold rises as well. It outperforms gold. Gold rose 40% in the COVID bounce. Silver rose 140%. So I expect that kind of thing again. It's going to come again. We don't know when or for what reason, but being positioned now ahead of that is at least what I'm doing.
Well, you both make a good case for silver and gold. Let's jump into your guys' newsletters and the exciting new team that you are, because I feel like that's pretty new. When was that, March, that you guys joined?
Yeah, so we always talk about M&A in the mining sector, right? Well, now we've got a little M&A in the newsletter business. So yes, Gwen Preston decided to do something. I basically purchased her business. Peter came over as well. So, the Gold Advisor and the Paid Prospector, the paid letter where Gwen's stuff came, basically doubled. Then you add in Peter's Silver Stock Investor. So his book, we both have books. So we've got a site, a brand new website as well. It's fully upgraded. It's kind of actually fun to use. Has everything in there. So the whole idea is to to share with people what we are personally doing in terms of what we buy and what we sell, what we're holding, so that if investors choose to, they can participate in that as well. So I have a free letter that covers 21 mining stocks right now, provide analysis just like you would get in a paid letter for free. It is a sponsorship site, but those companies are invited only if I want to invite them because they have a powerful case, and I would own the stock or buy the stock or go overweight the stock in many cases. And then I have a paid letter, Paid Art Prospector, named after the book, that goes into some more early stage opportunities that can potentially be more explosive. So higher risk, but higher potential reward. So it's we've got the dust settled now, and the most of the kinks worked out of the site. So we're excited to really move forward here.
Your Peter podcast, and then Peter, you have your Silver Premium as well. Do you guys want to just talk a little bit about those services?
Jeff and I launched Pater Podcast just a week or two ago. And basically what we're going to do is bring you more info, more research, more education, more coverage, talking to mining companies, giving you our thoughts on what's going on in the markets and what's driving things, how you may want to position based on our interpretation of things. And so we're going to have regular content that we're going to post there. I think you'll find it very interesting and very useful as you work your way through this precious metals bull market. Other than that, only about a month and a half or so ago, I launched a new service called Silver Premium. Now, this is really very niche, very targeted. It's meant for accredited investors. It's a way for people to have access to financings in the junior miner space, and I obviously focus on silver. What happens a lot of times is that when there is a financing, it does get announced publicly, but many times by the time it's announced, it's full. And so people who are interested have the means and have the ability and the understanding to want to participate in these kinds of things often just don't have access because they just don't find out soon enough. So the idea behind Silver Premium is that the companies that I have contact with will sometimes provide an allocation which I can make available to my subscribers of that service, and I will write up the opportunity in that financing, what I like about the opportunity and some of the risks as well at the same time, because that's always present. And then it's up to them if they want to participate in that particular financing. As some of your listeners might know, the beauty of financings is when sometimes or many times you'll get warrants, and warrants are kind of a leverage effect really on the shares that you buy through the financing. And so really I talk about that giving you the ability to almost turn back the clock, almost quite literally turning back the clock. In other words, if you buy into a financing, you pay 10 cents a share, and let's say the company hits pay dirt, and then and then that share goes to say 25 cents. Well, if the warrants that you got for free when you bought those shares are you can exercise them, let's say at 15 cents, for example, but the shares are now trading at 25 cents. Well, you can actually, as I say, turn back the clock, exercise the warrants, use them to buy shares at 15 cents, and turn around and potentially just sell those shares into the market at 25 cents and lock in that difference. So it really allows you to leverage up your initial investment had you only had the shares to begin with when you participated in that financing. So that's really sort of a quick overview of Silver Premium. So yeah, I mean, I'm working away at Silver Stock Investor, published bi-monthly, telling investors all about what I'm doing with my portfolio in silver, the opportunities, keeping them up to date with news on all of the companies in the portfolio, research that I bring, research that I do on the sector that you are not going to find anywhere else. And depending on, sort of more of a strategic approach in terms of timing, bringing new picks to subscribers through that service as well, from time to time, and growing the portfolio that way. So that really gives you an overview of what we're doing now and what they can look forward to.
So now that we've kind of gone through a little bit of everything, can we talk about maybe pick a couple companies that you both feel are well positioned in these markets for, as we go through the turbulence of this fall, pick a couple silver and gold or whichever ones that you feel are ones that the audience will love.
I'll give you one so we have the free letter and the gold advisor. There's 21 companies in there. But I'll give you one that's in the paid letter. I really like it. I'm very overweight this stock. I bought it in the open market and I participated in a private placement. And that is Emperor Metals. A lot of people may not have heard of this company, but it's in Quebec. They've got a small resource, 600, 700,000 ounces, I believe. However, the CEO it has used AI before with his previous company. He is using AI now with this company. They are actively drilling. They also have, I think it's 70,000 meters of unsampled drill core that they inherited when they got this. They're assaying another 10,000 meters of that right now. So I view this as a lower risk play, even though it's in the paid letter, because they already have a resource and the odds are they're going to prove up. They're going to go to 1 million ounces, maybe even 2 million ounces in the next resource. And they're not going to have to build a mill. If you look at the map where they are, they're surrounded by other mines and projects and mills. I think there's 4 mills just within, a couple hours driving distance within their deposit. And those mills are underused. They're underutilized. They need ore. And so Emperor, once they get to that point, they're not going to have to build a mill. They'll probably be bought out or they'll just sell their ounces to somebody else. So I really like that play. And like I said, I'm very overweight. The stock is up a little bit, but not a lot, so it's not too late to buy it.
So one that I'm really excited about is Vizsla Silver. It has been around for a while. I had some incredible news just a couple of days ago. They put out a PEA and their project has a stunning, I believe it's 86 or 87 percent IRR. It's just tremendous. It's more than a $1 billion dollar NPV. It's just really tremendous. And, that's besides looking at recent news because they're being very diligent about, continuing to keep drilling and keep growing the resource. And some of the results they've had just in the last few weeks have just been some of the best results they've ever had on top of this, outstanding PEA. So this is really, truly a sort of a top quality, top notch play. If you look at their entire land package on top of it, the resource that they have now that is more than 300 million ounces of silver equivalent. The rest of the equivalency is mainly gold, so I'm very favorable to that. That's just a small part of their land package, the southwestern portion. There's the center portion, there's the northeast portion. They have a long way to go. They have barely scratched the surface when it comes to mapping in terms of all of the veins that are out there. They really have what is likely to be an entire district and probably end up well over 1 billion ounces. So I really, really like Vizsla, and it's had a little bit of a run. It's quality name. It's held up better than its competitors. You pay for quality. But that's one that I think that, if you're going to own some silver juniors, you're going to want that in your portfolio.
It's actually outperformed more than double what silver's done over the past year or year to date. So silver is one of the leading metals this year, as Peter's pointed out elsewhere. But Vizsla Silver has more than doubled silver's return. So I think that leverage continues, both Peter and I. So that's a good one to hold, I think.
I feel convinced on that one. Peter and Jeff, it's been so great having you both on the show. Can you tell our investors in our audience where they can reach out to you? And if, I know you said that you're both going to be at MIF, but any of the other conferences that they can find you at and reach out to you guys?
Things starts at thegoldadvisor.com, and you'll see everything there. Our free letter, our paid letters, our books, our videos, everything is there. And we're going to start to offer even bullion deals soon, we believe. So we're going to try to be one-stop shopping here for anybody who's interested in the gold market. So yes, I'll be speaking at MIF, as Peter will too. So planning on that now. I'll also be at Beaver Creek, that conference. And then we'll see what happens in the fall. I'm tentatively scheduled to be at Brian Lundine's New Orleans conference. That may conflict with something else. We'll see. But lots of fun things coming up this fall. And keep in mind, September is gold's best month on average on the year.
Now I have MIF as well for September. There are actually one or two other potential things in October. I'm still waiting to hear. One has yet to be firmed up. Another I have to sort of double check on or see where that ends up leading. There'll be another MIF in early November. And then there is the Swiss Mining Institute that has its conference late November in Zurich. So I'll be there as well. So that's kind of what I have lined up for now. That can change. That's really the current schedule.
Well, thank you both so much for the show today. I feel this was quite a good wealth of knowledge for everyone for today.
Well, you asked good questions, Callie. Thanks for having me on, and let's do it again soon.
I've really enjoyed it too, and glad to be back with you, Callie.
Well, that does it for today's Exploring Mining podcast. If you'd like to be a guest or sponsor for this podcast, please contact InvestorIdeas.com. InvestorIdeas.com reminds all listeners to read our disclaimers and disclosures on the InvestorIdeas.com website. All investment involves risk, and this podcast is not meant to be an endorsement to buy or sell securities or products. To hear more podcasts, you can go to InvestorIdeas.com/audio. And a reminder, you can also hear our podcasts on iTunes, Spotify, Google Play Music, iHeart.com, TuneIn, Stitcher, Spreaker, and SoundCloud.